My dear friends, welcome. It is the 20th of January 2026. My name is Chris with Elliott Cafe. Welcome to the video. Well, it happens. It happens. We've been sitting here for the past several weeks at least talking about the S&P, about my fears and the levels that I was watching to see if this market is going to start giving us a decent reason to say, well, maybe it's time to accelerate the short side. And I think today was the first major price sign from the market. Before any of this happened, the market was sending us different hints that things are cracking underneath the surface. And I've gone through some of those things. I've expressed my worries. I've expressed the positions into my account, how they weren't working, things like that. Now, we'll see where this goes. This is just one day. That doesn't necessarily make a trend, but it is a larger crack in this uptrend armor. So I'm watching it closely because I kid you not, this market could turn around tomorrow. Right, you could get a piece of news from the White House, from Europe, from the tape overall, and we could turn and be, I don't know, 3, 4, 800 Dow points tomorrow, and before you know it, we're going to go to new all-time highs. At which point, we'll have to reassess, and none of this count in here will make any more sense, so we'll have to redo it. Which is the beauty of working with waves and working with markets in general, right? Things usually don't work out as we plan. Sometimes we're lucky and things do work out, and then, we boost and we say, oh my goodness, I'm smart and I've, figured this whole thing out. But it's not like that. We all know that losses are just around the corner. So I'm going to take this and go with it as much as the market will allow and see if it's going to turn into some sort of a larger wave two. And if it is, things have just started. And wave two can form in several ways. And it's way too early to start imagining all kind of scenarios and all kind of things that look cool for a YouTube video or for a Twitter post or for what have you. I'm not here to provide, any of that excitement scratch that some people might have. I'm not saying that are the people that are watching this. Again, I love you all and I welcome you to continue watching my videos if you find them valuable. But I do see out there in the Twitter sphere and in social media overall, I do see a lot of craziness, which makes this job of counting ways kind of, it's just kind of so much harder or so much, kind of less appealing at the moment that I see people taking this beautiful tool and making a mess out of it and just kind of turning it into the wildest pockets into the wildest pockets of their imagination. But that's how it is in markets. All right, so I'm expecting a continuation here. If it doesn't happen and the markets move back to the upside, we will address it. And I do increase my short positions, and I want to take advantage of a further decline if it is to happen. If not, I will have to take my losses and go home. So this is what's going on in the S&P, and we'll talk about Bitcoin because Bitcoin also has been turning. We've talked about it last Thursday, and we talked a few things there, and I'm going to remind you a few of those. But this is where we are in the S&P. This is where Fed cuts the 25 in December. The market actually has started acting very bad since October 10. Pretty much since this day back here, it's been kind of going nowhere. So now this is the first day ever since this little drop in here that we broke below the 50. And like I've said, this could turn around and, we could close the gap and continue to go over 7,000. So I'm not saying that, this is the perfect signal, but we did talk about the break of this level right here as the first sign, the break of the 50-day as the second sign, and then, the break of this level back here. And I drew some pretty lines on Thursday, right, with that kind of converging type ending diagonal, which all of them should be like that, right, where you converge into a three structure. But usually those tend to resolve all the way to the bottom, all the way up here towards 6,500. So that's where we would expect the sell-off to continue to go, if any of this makes sense. So this is what I see in here. Now, we also talked on Thursday about how the bulls, AII, start getting so excited as the market was making new all-time highs for the past several weeks, exactly at the time when you have to be cautious. Why? Because the tape is bad. And how do I know the tape is bad? I thought about posting this or maybe not, but I finally decided on it. I wrote this, I think, on Friday or Saturday morning. And if you want to know what it's all about, you can go up here on my Substack and you can read it. It's a big truth about markets last 4 months, and I'm not going to read this now. It's nothing. I'm not any big writer or anything like that. I just put my thoughts together. But what you can take from this is that, and I put this on Discord as well. I didn't offer a lot of explanation, so maybe now I did on this little post. But I want you to pay attention of how the market behaved from October. And the blue line is the S&P 500, and the red line it's the S&P 500. And well, you might ask me, like, how could these two be the same thing? Well, they are, because the blue line it's what everybody sees, and the red line is what you see if you look inside the price action of the S&P 500. This line in here, it's everything that happens with the overnight trades, with the gaps, the stuff that everybody sees when they open up a chart of the S&P 500. The red line, it's only what happens when the market is open between 9:30 Eastern Time and 4 p.m. Eastern Time. And you can see that there's a lot of selling happening in here. Or even if there's not a lot of selling, at least it's not going up, it's going sideways to down. So there's a huge divergence here between what Wall Street wants us to think by the way the market moves, right? And kind of what they do with the price during the day. And this shows that there was mostly selling, and all this was provided by gaps and by spikes in price before the market opened. And that's a little bit of a trick that they use so they can unload a lot of the shares and distribute into higher prices without us mortals kind of noticing what's going on. So if we look at those gaps and if we look at the actual price in the S&P 500, you will see that the market is much weaker than it looks, right? So, and this is the Nasdaq, which is even more of a disaster. Not only that, but I've showed you a couple of ratio charts where the Qs were losing a lot of ground, where the Macs were losing a kind of ground. And now, sure, people got excited about small caps and all of that, or we can blame the tariffs now. And again, we can create all kind of narratives that we want. But I have been warning about the cracks in the armor, at least for 4 weeks in here. So you got to give me that. Now, let's see where this is going to go, if it's going to continue or not, but I will monitor these ratios and see when they actually start turning up, because as you can see back here in April, the red line is above the blue line. So that's not bad. That's not bad. They show you what they're doing if you know where to look. So let's go. All right, so I'm going to continue. Let's talk a little bit about the S&P 500. I'm sorry, about Bitcoin. because Bitcoin and Ethereum and XRP and the rest of them haven't done a lot of good. And remember, I was quite disappointed, for a lack of a better term, to see the XRP push higher like this for whatever reason without actually building something. And these are usually signals that the market is just, it's just froth, there's just nothing there, and they usually sell this off, and here we are now attacking the lows, and we're probably gonna break lower. But the Bitcoin gave us, and I've tried to make sense of some kind of a wave count when we talked on Thursday about how this could be a leading with the wave one, and then how we have overlap and what have you. And I said, well, if this doesn't work, and there wasn't like strong evidence that it does just yet, and it breaks below this low, the 50-day, and maybe these highs back here, we got a problem on our hands. That this corrective pattern, it's probably not part anymore of the structure as a 1, 2, 3, 4, and 5, which even if it is, you're still going lower for one more wave. But if it isn't, likely this is, let's say, maybe a second wave or maybe a wave B. And I'm going to take you over to the Bitcoin chart in here and just look at this from an alleyway perspective. Again, I'm not trying to imagine a lot of things here and just say, well, we got complex this and complex that, and we're going to, I'm not trying to project. I'm just trying to project the next leg. And based on this, which is a very short B wave, I got a problem with this. It's a short B wave. And usually B wave would go towards 61.8. And this one, let's see, let's look at it. About 38, maybe close to 50%, let's say, call it whatever, 45%, give or take. So I'm not that happy with it. I'm also not that happy with its size, which makes me wonder, what if it's a wave two? Well, it doesn't matter. It doesn't matter. All of this is just imagination again, because what matters is what's going to happen next. What's going to happen next? Are we going to go down or are we going to go up? That's what everybody wants to know. So the evidence starts to come in slowly that we're going to go down. There is a couple of more levels that this market would have to break, like that 86.7. And if we start to crack below that level, right, that is, let me just put this in here, right? So that is where we are right now. We are into this support. So we're probably going to try to hold this. But then if you start to crack below these levels back here, I think we could be in trouble for a further decline. I also caution on the RSI here going into the 60 territory, and how in downtrends that usually offers resistance. And if we go and look at the weeklies, this hasn't even crossed 50, and it's below those moving averages, and usually that's when they sell it. Again, I'm not here to tell you that this is a huge crash in Bitcoin or anything like that. I'm just saying, let's watch it now, because they're coming after it with a bit more force. So let's see what happens. It's a very tough pattern now at this very moment to still consider this being some kind of a bullish development, right? Because of this complete turning here. Because now, how are you going to count it? Are you going to say 1, 2, 1, 2? I think that's very forcing the count. Are you going to say it's a 1? Because you're probably going to hear this stuff. You're probably going to say, oh, it's a 1. Some people, right? 1, A, B, and it's a C, and it's going to be a flat, and it's going to push Bitcoin to 120,000. Listen, the imagination could run wild, and it's fine. But let's keep a dose of reality of what we're seeing on this chart. And that is that we do have a rejection from higher prices and a break of moving averages again, along with an equity market that starts to act much weaker. And Bitcoin being a risk asset, for whatever reason, it's not acting like a huge defense in here, right? People seems to be dumping it. So we'll see. We'll see. I'm a holder of Bitcoin. I don't want it to go down, but I don't control what happens in the market. So so that's where I'm at. And to conclude, we'll see what tomorrow brings. It is Thursday. I know it's going to bring a good of a lot of good soccer games and football games right tomorrow on the Champions League, which also we had some great ones today. So I'll be excited for those. When it comes to market, we'll watch it. I will try to hold on to the hedges that I have and to the shorts and try to take advantage so I don't get hit too bad. But let's see what happens. Again, markets are tricky always. So thanks for watching, everyone. For any comments, let me know, and you can find me again on Twitter, Discord, here on YouTube. So I'm around tomorrow.